Okay, so this is Bradaman Limited, and this is the balance sheet. So as of 2017, now we call it statement of financial position. Okay, so we have the balance sheet. You can see them. You see, it's been long time. So stocks instead of inventory. So now we call it inventory. You don't call it stocks anymore. All right. So you have all the information that you need to see under the Brotherman Limited. Now it has other additional information. You can see it there. Bank overdrafts, bank loans and overdraft consist of 10% loan of 400,000 repayable in 2010, carrying a fixed charge on the company's land and building, and an unsecured overdraft of what? Of 287.
7.
So we also have demand for company's products fell drastically in recent years, and it goes on and on and on. And it's also talking about a scheme for financial reorganization has been drawn up for the consideration of the shareholders and creditors. The terms are as follows: one, the shares of one cedi each to be written down to what 0.2 per share. Subsequently, every 5 shares of 0.2 each are to be consolidated into one full paid share of one. The existing shareholders are to subscribe for right issue of two or new ordinary shares. A major
Thank
supplier
you.
agreed to exchange debt of 180,000, including creditors, for 180 ordinary shares issued. In full satisfaction of the 887,000 owing, the bank agreed to accept an immediate payment of 87,000 and consolidate the balance of 600 into a loan with the carrying amount interest of 40 per annum. You can clearly see what the bank is trying to do here. The credit balance on capital surplus and debit balance in the income surplus account and goodwill considered valueless. You understand this? Okay. So the rest are what valuation of the asset. Now required journal entries. You see, to giving effect to what proposed scheme of reconstruction. Write up the capital reduction account. Revise the balance sheet. Report for a group of dissatisfied shareholders explaining whether they should accept or oppose the scheme. Are you ready?
Yes, sir.
This question borders on two things. It's either they do reconstruction or they possibly liquidate. You understand? It's either they do reconstruction or they liquidate. Okay, so we've not started the liquidation yet. So if we in that sense, then we will concentrate on what capital reduction or reconstruction. That's the name of the company, Brother
Brother
Mo.
man.
For the year ended 2017, right? 2007, right? Okay, so please start mentioning the process. And now comfortable with
Yeah.
capital reduction,
So
what do you
fixed
look for?
asset.
So you have non-current, you don't call it, so you call it non-current asset. This is old school fixed asset. Okay, so you have what? First one is what?
First one is development cost.
You leave it.
Okay. Land and building. Plant and machinery.
What again?
Stock.
This one falls under current account.
Yes, sir.
I'm listening now.
Debtors.
Inventory. Mm-hmm.
From debtors, we have creditors falling due within 1 year. And that one, we have creditors.
Uh-huh.
We have bank loan and overdraft.
So let's go to let's go to
Finance by.
uh-huh, equity. What can you see there?
We have equity, capital surplus, and income surplus.
Share capital. And you say you have what?
Stated capital,
Uh-huh.
capital surplus,
Capital surplus. Uh-huh.
and income surplus.
And income surplus. Okay.
Yes, sir.
Is that all?
Yes, sir. Finish.
Finish. Okay. So when you just do it like this, when you are done, then you come and then you come here, then you come and open your words. Because when you look at the question, what do you think they want you to do? When you look at the question, the requirement, what do they say?
They are asking us to do capital reduction, the requirement, ledgers,
The more you say journal entries, that's what
general entries
ledgers. Okay.
to
So
give
let's go.
effect of proposed scheme of reconstruction.
Okay. So
Write
here,
up capital reduction account.
okay, so you then construct your capital reduction account. Then you underline. Okay, so you'll have your debit and credit. Now, what did I say you will do next?
Next, you go and open the journals
So you
one
start
by
from
one.
where? Okay, you start from where?
We start from the top. That is development cost.
Okay, so you open development
And then
cost.
go to footnote.
Okay, so please let's start from let's start from it. Let's start with the development cost, please.
Balance brought down 85,000. We go to footnote.
Okay, please have patience. Development
Cost debit.
cost account. Okay, wait, have patience. Okay, so when you are done, then you go to footnote. Development cost is what 85,000, right? Okay.
Yes, sir.
So and then when you go to footnote, what did they say about it? Let's all go there. I'm waiting. What did they say about it? Now
I'm not seeing
come to additional information. Come to the second paragraph.
second paragraph. A scheme for
No, second paragraph. When we say
okay.
second paragraph,
The demand for
the demand, the second sentence. Start from the second
the
sentence.
demand for the company products fell drastically in recent year owing to the import of high quality and cheaper products from Europe. The development costs appearing in the balance sheet above relate to a new product which has been perfected to a metal stage for which there is believed to be a strong demand. The costs have been properly capitalized in accordance with the provisions of relevant accounting standards. The company is in urgent need of capital to meet existing liabilities and the necessary new investment in plant and working capital.
Okay. So what they mean is this. That development cost that you've seen, they recently acquired it. And the development cost in what is in good position. Can't you see that? And for which there is believed to be a
Yes, sir.
strong demand. So the costs have been properly capitalized. You understand? It has been properly capitalized in accordance with what?
Yes, it has
With the
been
relevant
added
accounting.
to
You
the
understand? So the
fixed
company is in
assets.
immediate need of capital to meet existing liabilities and the necessary new investment in plant and working capital. So clearly, apart from development costs, the rest needs to be what? Needs to be reassessed. That is all that they are talking about here.
Okay.
You understand?
Okay.
They say the development cost appearing in the balance sheet above relates to new product which has been perfected in to a marketable stage, and
marketable stage.
for which there is believed to be a strong demand. You understand? So if the asset is in a good shape and they still need it for what? For their production, so that means they will keep it. It is not impaired. You understand? And it
Yes,
is
sir.
recently acquired. So you will not go and then do evaluation of it. You understand? So what
Yes, sir.
happens is that it will be kept. So it will be balanced, carried down,
Carried down.
85,000. Same. You close the account. That's all.
Thank you.
Let's go to the second one.
Goodwill.
Goodwill account. Okay. That one. Did they say anything? So goodwill has debit balance. How much?
Goodwill is 60,000.
60,000. Okay. What did they say
Yes,
about
sir.
goodwill? Did they say anything?
Goodwill, let me go to the footnote.
Goodwill.
Goodwill.
They didn't say anything about the goodwill.
Anything about
But
goodwill? Yes.
once goodwill exists in a book, it will be written off. Do you understand?
Yes.
Once automatically when the company is in distress, goodwill is also written off straight away.
Yes.
You understand? So
Intangibles
yeah.
doesn't exist.
So you credit what?
Goodwill.
Hey,
Capital reduction.
you credit capital reduction. How much?
60,000.
60,000.
Next one.
Okay, so now let us go and then balance it. Let us take it to
the capital reduction
capital
account.
reduction account. So you
The
have
debit side.
You have goodwill.
Goodwill.
How much? 60,000.
Yes, sir.
Okay, let's go. So, the next one.
The next one after this one is land and building.
Land and building. Land and building. Okay.
Yes, sir.
Okay. Land and building.
270,000 debit.
Okay. 270,000. Okay.
When we go to the footnote, the VI assets listed below are to be restricted at the following amount: plant and machinery, stock, debtors, land and building, 320,000. That is, it has been revalued.
Okay. So 320,000. And the balance is at a debit or credit?
The balance will come to the debit side.
All right. So you balance it off 320,000. 320,000. So that will be what? Capital reduction.
Capital reduction, sir.
So how much?
I'm coming. 320 minus 270. Sir, 50,000.
50,000. All right. So the next one.
The next one is talking about plant and machinery.
Plant and machinery.
Machinery.
Okay. All right. So that one too. So you have what? Balance brought down. Please, how much?
326,000. 26,000.
Okay, so let's go.
Then we'll go to footnote.
Evaluation.
It was revalued. It was revalued to 125. Okay,
so it will go debit or credit?
It will come to the credit side.
Okay, so 326,000. 326,000. So that capital reduction. So how much? The difference?
Let me find the difference here. 326 take away 125. Sir, 201,000.
Okay, so let's take them to capital reduction.
The capital reduction account.
Okay. First one is land and building. Land and building.
Land and building. That one is 50,000.
Again, so land and building.
So that will debit.
Hey, so it will come here.
It will come to the credit side of the
50,000.
capital reduction.
And then plant and machinery.
The other one, plant and machinery, that one is at the credit side, so it will come to the debit side. That is a loss.
So plant and what? And machinery.
Machinery.
Okay.
201.
201,000.
00.
Okay, that's fine.
00.
Okay. So the next one.
The next one we have there is plant and machinery. We have stock.
Stock. So
yes. Stocks.
Inventory. So you have balance brought down to how much?
Stock is 426,000.
426,000. Okay. So what did they say about it?
When we go down there, we revalued stock, and it is 210,000.
Okay, revaluation 210,000.
0,000.
Okay, so
426,000 minus 210.
Capital reduction.
So 216,000.
So
capital reduction.
6,000. Okay.
Capital reduction, credit side.
Okay, so here is what
216,000. 6,000.
And the capital reduction stock is, it will go where?
When we come to capital reduction, it will go to the debit side.
It will go
debit
to what?
side.
It will go to debit side. Okay.
Yes, sir.
Please say how much?
216,000.
Okay. The next one.
The next one we have there is debtors.
Debtors.
Yes, sir.
So that too. What did they say?
Debtors, the balance is 531,000.
Okay. Did they do revaluation?
Yes, they did revaluation on it. And then we had 500,000.
So then that means capital reduction will come here.
31,000.
Okay. Okay.
If you go to the debit side of the capital reduction account,
okay, so
there'll be debtors.
As
31,000.
00. Okay, let's go. The next one.
Now we move down to creditors.
Creditors. Payables. Okay, what did they say?
Creditors, we have balance. That will be on the credit side. Balance brought down. Creditors is 393,000.
Okay, so what
go to footnote.
What did they say?
Footnote.
They didn't say anything about them, right?
Yes.
Okay, so if they did say, then the balance will remain the same.
The same.
So that's 393,000. Okay. Okay, so let's go.
Then the next one, bank loans and overdraft.
So bank loans and then
overdraft. So that when I see somewhere, the
Absolutely.
way we are tracking, I get
it. Okay, so bank loans and overdraft. All right. I know this is about liability, so it will go where?
Yes, it will go to the credit side.
Credit side. How much?
It's 687.
687,000. Good. When you go to the additional information, did you notice anything like that?
When I go to the additional, yes. Footnote 1. Bank loans and overdraft consists of 10% loans of 400,000, repayable in 2010.
Okay.
carrying a fixed charge on the company's land and building,
Okay.
and
And
an unsecured overdraft
overdraft
of
of two eight
287,000.
7,000. Let me explain. Don't go further. Have you seen
Okay.
that? Have you seen that sentence? Have you seen that
Yes, sir.
sentence? They want to tell you that
Yes, sir.
when they went for a loan, bank loan and overdraft. It consists of 10% loan of 400,000. Have you seen it?
Mm-hmm.
Out of
Yes, sir.
600 and something, 687,000.
6687.
There is 10% loan of 400,000, which will be paid up in what, 2010, and it
2010.
carrying a fixed charge on the company's land and then what, building. All that they mean is that, have you seen this 400,000? They tie this
Yes.
400,000 loan to land and building. It's like collateral. You understand?
Sure.
So they tie it
Sure.
to land and building. You understand?
So in case they failed, it means they
In
take
case
the
they
land and building
failed, we have to sell land and building to defray that
to
400,000.
cover.
You understand?
Okay.
You get it? So
Thank you, sir.
good. So you see, when we are coming to do liquidation, you will see these things there. You understand this thing better. Because when we are coming to do liquidation, assume we are doing liquidation. Like after we sell all the assets and we are coming to do the sharing of the proceeds.
Settlement.
So we are coming to do the settlement. You realize that items that are tied, loans that are tied to an asset, we share them first. Like we would have seen that this money, this 400,000 would have been paid up against the land and building during when we are doing the liquidation sharing proceeds. You understand? But we are not doing liquidation.
Thank you.
But I'm explaining for you to understand this. And again, we also have what we call unsecured overdraft of 287,000. This one is
so when you add the two, you get the same amount.
So this is unsecured loan. You understand? So this one too, we will also we will pay it also as well. You understand? But the first one, the one which is tied to land and building, we pay first before this overdraft will be paid later. You understand? Well, this one is unsecured.
Thank you.
You understand? But when we are coming to do liquidation, all these things will feature there. But in this, but you see, they are just explaining it to you here. You understand? But this one will have little to do with the what we are doing under the ledgers. You understand? Okay. Good. Now, and then the second sentence spoke about the development.
The demand for the
no, that one day we've already talked about it. You remember when we were doing
we've dealt with it.
The development cost. Okay.
We've dealt with it.
Yes, we've dealt with that one. Now, if you want to know about the bank loan and overdraft, come to Ivy.
Ivy.
Yes.
I'm there.
Read that one.
In full satisfaction of the 68,000 owing, the bank agreed to accept an immediate payment of 87,000.
Have you understood it here?
600,000.
Have patience. Have you understood that sentence? Have you understood that?
Yes, the bank is yes, sir. The total amount of 68,000 owings, total owings. The bank is demanding an immediate payment of 87,000.
Good.
Then giving them a room to pay the rest.
Good.
That is the 600,000.
You understand? So stay there. Now they said out of that money, the loan we have to pay what? We have to settle how much?
87,000 now.
You understand? So here we have to what? Settle this one. You understand? We have to pay it cash. How much? 87,000. Do you understand it now? Have you seen it? So if you have to pay this one, then that means we have to open which account? We have to open what?
Bank account.
Good. Cash or what? Bank account.
Bank account.
Okay.
Thank you.
So if so, since we are paying 87,000, then we have to credit
The
what?
bank will pay. So we
You understand?
credit.
So we have to credit bank with that amount, right?
Yes,
Right?
sir.
Okay, so that's part
Yes, sir.
payment. That's part payment. Bank loan, which is what? 87,000. Are we okay? Good. So here,
Yes, sir.
part is paid. Now the now what are they asking us to do? You understand? So we will be left with what, how much? Balance carry down will be how much? 600,000, right?
Yes, here.
So you have 687,000. 687,000. Now, please, in the same area, read the rest of the sentence you have there. They said that
Okay.
what?
In the same area, we are saying that carrying interest, that 600,000 loan,
Okay.
is carrying an interest of 40% per annum, repayable in 5 equal installments
Mhm,
or annual installment,
mhm,
commencing on 31st December 28.
mhm.
The loans is to be secured by
On
a
land
fixed.
and building. You understand? So here, have you seen
Yes,
what
sir.
they've done? They said that okay, after we've settled 87,000, the rest of the money, right? The rest of the money will be paid in 5 years' time, and the interest on it is what? 40% loan. Do you understand?
Yes, sir.
So the interest will be what? Will be the name of the account will 40% interest bank loan, right?
Okay.
Okay. So it's a bank loan. So this bank loan, because it's what? Because it is liability, it will have what? Credit balance. How much? 600,000.
It
Please,
will have credit balance.
it will have credit balance. 600,000.
Yes, sir.
Please, are you with me?
Yes, sir.
Good. Okay, now, when we read the narrative about the loan, they said that the rest of the loan repayment will be what? Loan repayment will be
Will
how
be
many?
settled in
5
equal
years.
installment.
5 years installment. You are not starting from what? Starting from when?
2010, sir.
No, starting from when?
And they stated it in it.
Starting from 31st December 2008.
08, 2008.
So,
Commencing.
so 2008. You understand? December.
Yes, sir.
Why did they bring this one? They brought this one a reason. They didn't bring it for nothing. You understand? They brought it for a reason. Watch here. What they mean is this. What they mean is the bank loan is how much? 600,000. And you are going to pay it what? 5 years equal installment. Is that not what they said? You are going to pay it 5 years equal installment. Is that not the case? So equal installment. It means that you need to divide what? 600,000 by what?
By 5.
By 5. So
By
you get 120,000. Do the math with your end if you will not get 120,000. 120,000. So every year you pay 120,000. Is that not the case?
yes, sir. The
Good.
same amount.
Good. Now, they said that then you pay it for 5 years. So every year you pay 120. And now they told you that the payment will start from what, 2008. And this account you are preparing is 2000 and what? 7. The accounting year that we are preparing here is
Wanted to
2007.
see from 2007. 2007.
Right? And they said that the starting of this loan will start from 2008, December. If so, then you need to what? You need to separate the loan payment into current and non-current payment. You understand? So here, the current,
Okay.
because you are paying next year, you start the payment next year, you need to separate it. So you say that current payment will be what? Will be 120. And then non-current payment, that's the long term. Non-current payment will be what? Will be the 600,000 minus what? The 120,000. The balance is what? It's 480,000. You understand?
I'm writing everything over there.
Okay, but I'm saying, do you understand what I just did here? Even if you don't separate it, your account will still balance, but they brought it here because as an account,
600 says 600 minus 120.
yeah, 600 minus 120,000. As an
Yes, sir.
accountant and accounting, sorry, you should be able to know current account and non-current account. You understand? You have 600 loan
Yes,
to
sir.
be, you have 600 loan to pay for the next 5 years. And they said that the repayment will be equal in installments. And they told you that the payment will start the following year. If so, then you need to bring your current liability. You understand? Out of the loan, you need to bring the current liability. Then the rest will be the rest of the years to come. That's why I segregated it, current and non-current. Do you understand? When you add them, it will still give you 600,000. Do you understand it? No, do you understand? I just want to,
Yes, sir. Yes, sir.
because even if you don't separate it, the account will still
It will
balance.
give us the same value.
You understand? But he brought the year of for starting year of 200 for a reason. You want to know whether you can you can be able to what they call separate the current liability and the non-current liability from the same loan. Are you
Okay.
with me?
Yes, sir.
Good. Now, if so, then our loan here, what I just demonstrated, our loan here, how is it going to look like? You understand? So here, your balance, how is your
Bank
balance going to
loan.
look here?
The bank loan.
Yeah, so the part payment, yes. So you say part payment,
Okay.
which is 120,000. You understand? Then you have what? Balance CD to what? 400 and what? 80,000. So you will realize that when I go to balance sheet, balance carried down will be what? Will be long-term liability, and 120 will be what? Will be
Okay.
current liability. Do you understand?
Okay. Okay.
They brought this in for a reason. They didn't, this in 2008 starting payment is not there in vain. They want to know whether you can separate the long-term and short-term liabilities. Okay, let's go.
So current payments is 120.
Yes, and then non-current payment is 480,000. All of them have carried balance. Even if I don't separate it, the account will still balance. But there's a reason. The one they did that. So at the end of the day, when they are marking, they will give you the tick mark. Okay,
Okay.
let's go. So remember that
Then
this
the
part
next.
payment is current liability. So when you are doing the balance sheet, you should remember. Yo,
Okay.
let's go. What again?
The next one is net current liability.
Net current liability.
Yes, sir.
Which one is net current liability? That one, there's nothing there.
So,
There's nothing
okay.
under it. So go to equity
Then
straight.
total asset less current liability.
No, forget those one. There's nothing to talk about. Go to equity.
Okay. Then we go to stated capital,
Uh-huh.
capital surplus, and income surplus. They are the
Uh-huh.
last three.
Okay.
Stated capital.
Okay. Okay. What did they say?
Yeah. So we have a value there. It's
So
telling us that
open balance is what? Balance brought down for senior capital is how much?
800,000.
So what did they say?
Then we go to footnotes.
Good.
So footnote I.
Uh-huh.
The shares of 1 Ghana cedi each are to be written down 2.20 per share.
Okay. So
And
here.
subsequently,
So
every
when you are giving such, come here. Come and do what I taught you yesterday. That when you have your what, your your share capital. Share capital is what? 800,000.
Yes, sir.
And then the price, share price is what? How much is the share price?
1 cedi, sir.
1 cedi. So if you want to know your number of what shares, is what? It's 800,000 divided by 1. That gives you 800,000, right?
1,000.
Right?
Yes, sir.
Good. So now you know your share to
Yes,
be
sir.
800,000. Good. Now, what did they say?
The shares
Uh-huh.
has dropped
Uh-huh.
from 1 cedi to 0.2 cedis.
Okay, so all they mean is that now, so this one is what? All right, so now your new share value. So now you have your what? Your share capital. So here they want to tell us. So you have now your what? Your share to be what? To be 800,000, and then share price is how much? Is what?
One is now changing.
How much?
0.2.
Good. So now your share now value at what? 2 cities, 20 pesos, 20 pesos. You understand? So now,
Yes, sir.
now this is your what? This is how much. So this is how much your share is now going to value. Is that not the case?
Yes,
So
sir.
in that case, when you multiply this one by the, what do you get?
I'm multiplying the two. 800,000. 160,000, sir.
100 and
60,000.
160,000. Your share value is going to be 160,000. Is that not the case?
The shareholders are losing 0.8.
So they forfeit. Forfeiture is how much? 0.8. So this 0.8, the number of shares is how much? The number of shares is how much?
The number
800,000.
800,000.
So when you multiply, what do you get?
640,000.
640,000. You remember that this morning I said that who is gaining this money and who is losing this money?
This money will go to the company is now gaining.
Good, because the shareholders have decided to give them 80 pesos, right? So this money,
Yes, sir.
so where will
Freely.
it go?
The 640.
It will go where?
Capital reduction.
It will go to
If
capital.
you are gaining, it will go to the credit side.
It will go to capital reduction. So this one will go to capital. So this one will go to capital reduction.
The credit side.
No problem. This one will go to capital reduction
The
account.
credit side.
Yeah. So let us take it there so that it will not, we will not miss it.
Elude our work.
Okay. So yeah. So this one is for share capital.
Yes.
How much? 640,000, right? Good.
Yes, sir.
Let's go back. So we have it here. So
okay.
So we have to go and then enter it also in a what? In our stated capital, right? We have to
800,000.
we have to debit it to capital reduction. You have to debit the 640,000 here. Or have you forgotten? Well, it will reduce the 800,000.
Yes.
Read further because I've seen that they've said something further there.
Okay, let me go there, sir. So the question is saying that consolidated into one fully paid shares of 1 cedi. The shares of 1 cedi each are to be written down to 0.2 per share.
Okay.
And subsequently, every 5 shares of 2.20 each are to be consolidated into the fully paid shares of 1 cedi.
Okay, so let me help you here. Where is it? So all that they are saying, and listen very carefully here. Earlier, the share the unit price is 1 cedi, right? And it should be written down to 0.2 pesos. And subsequently, every share of what? Of 0.2 each are to be consolidated into one fully paid share of 1. So all that they are let watch here. So the English that they are talking about is that after you are done here, what they want to mean is that subsequently every 5 shares of what of 0.2 each are to be consolidated.
Sir.
You should write down the share unit to 0.2 pesos.
Yes,
And
sir.
subsequently, after you are done that, every 5 shares of 20 pesos each are to be consolidated into fully paid share of what? Of one. Every one share is to be consolidated. Subsequently, every 5 shares of 20 pesos are to be consolidated into fully paid one share. How do you understand that? When they said 5 shares of 20, how do you understand that?
Shares of 20.
Yes.
Then 25/20 times the value of shares.
That gives you what? It should be considered as a one. You see, so here they are talking about this. So after you are done here, they said that what do you call it? 0.2 pesos shares.
Yes, sir.
That you have. They said that subsequently, every 5 shares. You understand? They say that every 5 shares that you hold, every
Yes, sir.
every 5 shares is like maybe you have it like 1, 2, 3, 4, 5 is equal to what? 0.2. So every
Yes,
5 shares is equivalent to 20 pesos. That's what they mean. Every 5 shares is what? Every 5 shares
is
is
going
what?
for
You understand? And it's a
2
subsequent.
pence,
Every 5
0.2.
shares of 20 securities are to be consolidated into one Ghana city. So here, so that means 5 shares, which is equivalent to what? 0.2 pesos is going to give you what? One is going to be consolidated to what? To be one series. You now
Okay, sir.
understand.
Yes, sir.
You now understand what they mean here. So
Yes, sir.
after they've done this, after they what? They have the what the shareholders have reduced their share to 2 pesos. They said that okay, if you hold 5 shares, it was equivalent to 20 pesos. However, you are going to pay we are going to value it at what? At one series. In any case, if you hold 5 shares of what? Of 0.2 is going to give you what? One series, because multiply 5 times 0.5 is how much?
Sir, it's 1.
It's 1. You understand?
Yes, sir.
So it comes to the same point that though they have sold. So when you look at it here, before the people decided to what? To reduce their share value, the unit share price is how much? One series. The unit share is what? One series. And they reduce it to what? 0.2 pesos. And they said that, okay, this is the arrangement. If you hold 5 shares, it was 20 pesos. However, we are going to consolidate it and give you every 5 shares to be one series. So subsequently, after doing this one, the share now value unit price is now what? 1 Ghana cedi, not what? 0.5. What 0.2. Do you understand now?
Yes, sir.
Okay.
Yes, sir.
Now, once you've understood it, now let us come here. The shares. How much share is left? Number of shares. How much share is left now? Watch here. The number of shares was what? 800,000.
800.
And then the share price after they've given out was what? Was 0.2. So when you multiply, you had 160,000.
160. Yes.
So that becomes your share capital. New arrangement. When you read it, what did they say? They said that. What did they say? They said that the shares now no, your share capital now is how much? Your share capital now is how much? After you've done the
160.
160,000. This is your share capital. And what's your share price?
Now, but it has come
Share
down.
price would have been 0. What? 0.2. But after
Yes.
they did the consolidation, they said it should what? It should be one.
1 cedi.
So
Now I do understand.
so now you realize that your what? Your share capital
Will be the same amount.
will be the same amount, 160,000. Okay.
Yes, sir.
So if your share capital is 160,000, your share price is what? 1 cedi.
1 cedi.
You understand? It will give you this. So this is what
You
that
multiply.
this is what that I want you to understand. Okay.
Thank you.
Now that you've understood this, read further. What did they say?
The existing shareholders are to subscribe to a right issue of 2 new ordinary shares issued at 1 cedi per share for every share held after the proposed reduction and consolidation.
So so now you have what? Right issue. This is purely IAS 33. So the right issue, what did they give? What is the ratio? What ratio did they give? They give what? Every
gave
2 shares
2.
for what?
Yes.
Is that not what you see over there? Subscribe 2 new shares, ordinary shares, issue at 1 series. If you have 2 new shares at 1 series, what is the number of shares that you have? What is the total share that we have? What is the total share number?
160.
Thank you very much. So how did we get the 160? So all you have to
We
do is
were told that the 160 times 1.
Good. So here, when you are confronted something like that, convert your share capital into what? Into number of shares. So here you have what? Your share capital.
Okay.
Your share capital is what? 160. And they said that the share price is what? It's 1 series. You understand? So if you want to know the number of shares, it will go at 160,000 divided by 1. That gives you what? 160 shares. And they said that there's what? There's a right issue. So once there's right issue is going to what? Is going to increase the number of shares that you have. You understand?
Yes.
Good. So once there's a right issue, you need to convert your what? Your share capital into what? Into the number of shares. So here you have what? Now right issue. Now the right issue is what? 2 is to what? 2 is to 1. So you will pick what? 160,000 divided by multiplied by 2 divided by 1.
320.
That means that, watch here, that means that they have added 320,000 shares. Any question?
To the 160.
Yes. So now you see that you have 320,000 shares in addition. So here, this is how it's going to look like. Watch here. You have your outstanding shares that you were having. 160,000. Now you also have what? Right issue. I'm coming here. You have right issue of what? 320,000. All of them are in shares. But what I say?
Yes, sir.
All of them are already in shares. So you need to take convert them into values. You multiply by what? Unit price. You multiply by unit price. So this one what? 160,000. This one we were 320,000. I'm doing this note, a lot of notes, so that you will understand.
Yeah, when I see it, I'll read.
Yes. You realize that there's a right issue. The right issue is how much?
The right issue is giving me 320.
Good. So it is going to increase your share capital. Is that not the case? You credit your share capital with right issue. 300 and what? 20,000. And remember, once a right issue is floated, unlike bonus issue, right issue, the shareholders will pay money for it. Only the bonus issue, they don't pay money. But the right issue, they will pay money. 1 cedis. The unit price of the share is what? 1 cedi, right? They will give them every 2 shares, they will give them 1 cedi. They will pay 1 cedi. So when they pay the money, you debit your cash you credit your share capital. So right issue bank 320,000. We are done. So here, what we are coming to do is that let us balance the cash accounts.
The account.
So what do we have here?
87,000. Part payment.
So the difference will go how much?
So I'm coming.
So your balance
233.
Which one?
233.
233 for the bank balance. Okay, let's go to our stated capital.
100,000.
So what is the total here?
The credit side will be 1,120,000.
Okay, 112,000. Okay, so balance it for me.
480,000.
480,000. So you remember when you said that when you add the two, you
Yes.
get 480,000. Yeah, that.
Yes.
Okay.
And
So
you said I shouldn't rush.
you shouldn't rush it. You will find it here.
Thank you.
That is it. So let us go to our balance. Let us go to our statement of financial position. No, let's come to our capital reduction account as well.
Capital reduction. On the debit side, we have 4 items.
Go to your equity. You didn't mention capital surplus and income surplus.
Yeah, and income surplus.
Oh,
yes, sir.
My brother.
Sorry. But they all come to the debit side.
No, how do you know that?
Okay, let's balance them.
So please.
Let's balance them. Capital surplus.
Capital surplus account. Debit or credit balance?
Or credit balance, yeah.
It's our credit balance. So balance
50,000.
50,000.
Yes.
And this one will also, it will be written off in the capital reduction account, which is 50,000. All right. And the other one is income surplus. Okay, that one too. Is had debit balance? I know.
That one had debit balance.
How much?
232.
Okay, so it will also be written capital reduction account, which is 232,000. So that one to go. Okay, so let's go up.
So the capital surplus reduction will be credited. Capital reduction account. Capital surplus will be credited.
Capital surplus will come here. 50,000.
Yes, sir.
And then income surplus. You say it's 232,000. That's right. Okay.
Debit side.
Okay.
740,000.
740,000.
The same value, sir.
So 740,000. So there's no capital loss or capital gain here. So it has balance. Now let's go straight to our balance sheet and do the needful. Development cost was how much?
85,000.
85,000. Then you'll bring it to 11. Land and building.
Good. Worked on land and building, and
let me show it. Land and building. 320,000 revaluation. Have you seen it?
Yeah, revaluation 320.
320,000.
Then plant and machinery. 125.
125. Good. Now let's go to.
Then we go to stock. Stock 210,000.
Okay, so stock 210,000. Debtors
500,000.
500,000. Good. Creditors
393.
393,000.
Bank and loan 600.
Watch it. I told you that.
Yes, sir.
This one is current liability. So I told you that.
Yes, so we have to break it.
You understand? So
yeah, we have to break it.
So that is loan. This is current. So how much will come here? Remember that. Remember I.
480.
No, no,
Loan
no, no,
480.
no, 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 no. Watch. This is
Another
current
one.
liability. I've already explained this to you. Remember, bank loan. The total bank loan was 600,000, and I divided it by what? By five years,
About
and I had 120. Have you forgotten?
120.
Have you forgotten? I say you should divide it into current and non-current liability.
So 120 and 480.
So that's why I said. So that would be what? 120,000 here, and then
Okay.
the rest will be. You will take the rest to where?
That will go to non-current payment. The next one we have on the radar is
Share capital is how much?
net share capital. 480,000.
And then capital surplus,
Capital surplus.
income
I think we had
surplus.
50, and this one is
Then you do your what? Your non-current what?
okay.
Non-current liability,
Okay.
which is what? Bank loan.
That is 480.
That's how much?
480.
Balance it.
1,240,000.
147,000.
124.
I can hear you. So you added it up to where?
That is the asset first.
Okay.
124,000. Then 393,000 plus 120,000 plus 480,000 plus 50,000.
Then I should have brought this one down here. I should have brought the current liabilities all under the equity. But whichever way, don't worry. Add them.
So the stated capital and others, they are all out there.
Out from where?
Stated capital nil.
No.
Income nil.
No, what you will do is that watch here. What you will do is that this are balance it very well. That the way they are arranged, balance it this way. Balance it this way. After you've had this one, then you less current
those values.
Those one from it. We didn't bring bank, so you have your what? Your current. Have your what? Your stock. Your
debtors.
And your bank. Okay, so this one is what? 2, 1. Okay, then the bank is.
And bank is.
The bank is how much?
So I'm going down there. 233,000.
233,000. Okay.
1,000.
You add the bank. What do you have?
I balance it.
No, add the bank.
No. I did the liability side. I had the same
when
value.
you add it, what do you have? That's all that I need.
1,470,000.
1,470. I'm seeing when I close my eyes, I can see that there's what this three because of the zeros. This three will feature this one. This last three will feature. Add it again.
1,470
plus 233,000. I'm getting 1,473,000.
Yes, 1,473,000.
Then you less the current liability, which is what? 39.
It has balance. I've done that one.
1, 2, 3. Which will give you 100 and what? Here will give you 960,000.
And the two values down there is 960,000.
Okay, so that's
so your balance.
60,000. Okay, thank you very much.
Yes, thank you, sir.
You're welcome. So
thank you very much.
You should practice this one over and over again.
And over is true. It's true. The skills.
Yes. So because I've already advised you that